Hello and welcome to the latest property market update. I'm Jade Harling from onthehouse.com.au. National dwelling values continue to trend lower, falling by 0.5% in October according to results from our parent company CoreLogic. Dwelling values fell across Sydney, Melbourne, Perth in October, pushing the National Home Value Index further into negative territory, with tighter credit conditions nominated as the leading contributor to slower housing activity and lower dwelling values across Australia. The latest results take the annual decline across the national index to 3.5%, signalling the weakest macro housing market conditions since February 2012. The weakest conditions took place across Australia's two largest cities, Sydney and Melbourne, where investment buyers were the most concentrated, supply additions have been the highest, and where housing affordability is the most stretched. Sydney values dipped to 7.4% over the past 12 months, while Melbourne values dropped 4.7% over the same period. Values also declined in Perth and Darwin. However, the downturn in these two cities have been ongoing since mid-2014, with values falling 3.3% and 2.9% respectively over the past 12 months. Although dwelling values are rising on an annual basis across the remaining cities, the pace of growth has eased. Adelaide dwelling values increased by 1.8% over the year, while Brisbane recorded an increase of 0.4%. Canberra and Hobart recorded the strongest annual rate of growth, with dwelling values up by 4.3% in Canberra and 9.7% in Hobart. The regional housing markets of Australia returned a diverse performance. Regional Tasmania stood out as the only broad region nationally where dwelling values are recording double-digit growth, up 11.4%. Both Hobart and regional Tasmania continue to record strong housing market conditions, driven by a robust housing demand coupled with a shortage of supply. Gross rental yields are slowly recovering as dwelling values trend lower and rents edge higher. Nationally, yields are picking up from previous record lows, rising from 3.7% in October last year to reach 3.9% in October 2018. Despite the subtle rise, gross rental yields remain well below their decade average of 4.3%. Thank you for joining me for the monthly indices update. We look forward to speaking with you next month.